Anatomy of trading breakouts. So I'd been posting a couple of charts on the trading group and I had a few people ask questions and I think there's some uncertainty as far as how to trade these breakouts. So what is a breakout, how to set stop losses, and many of the basic parts will be covered today in this video. Although a detailed video for stop losses will be uploaded later. Breakout trading is used by active investors to take a position within a trend's early stages. Generally speaking, this strategy can be the starting point for major price moves, expansions in volatility, and, when managed properly, can offer limited downside risk. Let's take an example. Here's LTC chart. Okay, suppose I stated buy the breakout or buy the retest of the breakout. So you're not gonna buy it now while it's in the triangle, you're gonna let it do it. It's staying in the triangle. You're gonna buy it once it breaks out and closes outside the triangle. Look here, it closed above the triangle giving us quick gains. After breaking out from the lower triangle, LTC made another bull triangle. See this long wick up here, this is where it broke out, but came back within the same interval. As a result, we should wait for the candle to close above the triangle, otherwise we might get trapped in the fake outs. Also, before moving any further, I wanted to explain how to read this thing. This is LTC and BTC pair on Binance, and this 240 minutes is the time frame the chart is being viewed on. 240 minutes can be counted as 4 hours. NOW. What we are looking over here is that the price breaks this yellow trend line and closes above it. I'll go over this again in a second. What is a breakout? A breakout is a stock price moving outside a defined support or resistance level with increased volume. A breakout trader enters a long position after the stock price breaks above resistance. Once the stock trades beyond the price barrier, volatility tends to increase, and prices usually trend in the breakout's direction. Here on the LTC chart we need volume as confirmation, which will indicate that many others are looking at the exact same trade and hence backs up the breakout. As a side note, you can put your stop loss beneath the upper trend line or maybe somewhere in the triangle itself. You need to give yourself enough room so that you don't get stopped out before. Typically, the most explosive price movements are a result of channel breakouts and price pattern breakouts, such as triangles, flags, or head and shoulders patterns. Again, these patterns are my favorite. I like to see these patterns. I like to trade these breakouts. It's very easy with a less risk involved. This is what you call an ascending triangle. You can see it broke towards upside, so you would have bought this essentially after it broke out through this support resistance line. Now what's the target of this breakout? The distance from here to here, you put it right above the resistance line, so when the price breaks above the resistance line, you know where to take profits. Moving ahead, we have the next topic, finding a good candidate. That's where I try to help you guys. I post a lot of these charts on the trading group and guess what, we have been making consistent gains out of them. Right now, it's very difficult to trade these patterns, so I'm kind of very cautious about these trading setups. But also this is the reason I like to trade these, because if a setup doesn't break out you're not opening a position, and there is no potential for losses, and if it does break out you're setting up stop losses so close that even in the case of a fake out you either end up on break even or a slight loss. The key here is you gonna use different amount of capitals, so that if there is uncertainty in the market like the current situation, you only use a small percentage of your portfolio to trade, and if it's a better trade, you're really sure about how the market is trending with the trend, then it's a lot easier, and you can use a larger percentage of your portfolio, so it's going to give you a good risk to reward ratio. Coming back to the text we have. So when trading breakouts, it is important to consider the underlying stock support and resistance levels. The more times a stock price has touched these areas, the more valid these levels are, and the more important they become. At the same time, the longer these support and resistance levels have been in play, the better the outcome when the stock price finally breaks out. If this would have break upside, you would take the distance here, or you can take the average of swing high or swing lows. Okay, so swing high, swing low, so swing high, swing low, so swing high, swing low. You can take average of that. Let's say over here you're at about 62, over here you're about 68, so you got about $6 difference, so that's gonna be your target. Remember, you're buying the breakout towards upside, otherwise as you may see here in the image, that instead of breaking upside it broke to the downside as prices consolidate. Various price patterns will occur on the price chart. Formations such as channels, triangles, and flags are valuable vehicles when looking for stocks to trade. Aside from patterns, consistency and the length of time a stock price has adhered to its support or resistance levels are important factors to consider when finding a good candidate to trade. The necessary consideration once we find these setups is the entry point. Entry points are fairly black and white when it comes to establishing positions on a breakout. To determine the difference between a breakout and a fake out, wait for confirmation. For example, fakeouts occur when prices open beyond a support or resistance level, but by the end of the day, they wind up moving back within a prior trading range. If an investor acts too quickly or without confirmation, there is no guarantee that prices will continue into new territory. Many investors look for above average volume as confirmation or wait toward the close of a trading period to determine whether prices will sustain the levels they've broken out of. Remember, there's a lot of learning that needs to be done in this group. It's not going to come in one day. It's gonna take some hard work from both sides. Also, the amount of money you make in future is going to be ridiculous. Planning exits. Predetermined exits are an essential ingredient to a successful trading approach. Where to exit with a profit. Look at the stock's recent behavior to determine a reasonable objective. When trading price patterns, it is easy to use the recent price action to establish a price target. So like we talked about, this is $6 wide here, so you basically add this range to the length here. Add so 69 plus 6 is 75, so you should start taking profits at $75 range, basically some at 73, some at 75, and you might leave some for 77, just in case if it goes more higher. Just don't get too greedy. Just keep taking profits off the table and move to next trade. In simple terms, wash, rinse and repeat. Where to exit with a loss. It is important to know when a trade has failed. The biggest thing is that you should learn to stake losses too. A lot of people in retail rides these downtrends and they just hold their positions, which is completely wrong, so it is important to know when a trade has failed. Breakout trading offers this insight in a fairly clear manner. After a breakout, old resistance levels should act as new support, and old support levels should act as new resistance. Look at this figure. Price comes up, rejected. Price comes up again, rejected. Again the price comes up and successfully breaks the resistance and take pullback. So here the previous resistance should turn into support and should bounce again, but unsuccessfully the new support is unable to hold and the price falls back again, which means this was a fake breakout. So you could get some profits here too, but it's always safer to. But the retest again. Retests don't happen always. And when setting stop loss here, you can put it a little below the support and resistance line, because then you might catch a wick. So institutional traders and smart money, they'll attempt through what it's called stop hunting. They'll attempt to activate your stop loss, which basically brings liquidity in the market, because all sudden, that happens, you got buy back into the trade. Then you're buying at a higher rate. After a trade fails, it is important to exit the trade quickly. Never give a loss too much room. If you are not careful, losses can accumulate. Where to set a stop order. When considering where to exit a position with a loss, use the prior support or resistance level beyond which prices have broken. This works anywhere in crypto, so you need to learn how to draw the support and resistance line. Just to kind of sum everything up, you need to find a good setup. That's the key here. You need to find strong support and resistance level, and you want to watch those level. You've to wait for the breakout. Do not buy prematurely. Wait for the crypto to make its move. Be sure the breakout will hold. So if you're going to take a trade, set an expectation of where it's going. If you don't, you won't know where to exit the trade. Before you open any trade, you want to have an exit strategy. Allow the crypto to retest, as it will help a lot. You know, when you see the crypto come back down, you see and bounce back, that's the safest time to buy. Again, learn to observe. You've to know when your trade has failed. Make sure to exit the trade. Don't gamble. This strategy requires a lot of patience. You have to reduce emotion and be more objective about your trade. Take your money out of the market, take profits, have a plan of attack. Sometimes it's tough for me also. When someone asks, hey Jake, what do I do here? You've to have a plan first. Okay. Binding up. I hope you learned something from this video. We'll see a lot more of these trading strategies in the upcoming videos. Till then, enjoy yourself and stay safe, and join us on Telegram for early updates. All links are in the description.